Hello there. Welcome to Cost and Management Accounting, N5. We are still working on a paper from June 2021. Today, we want to look at question 5, and this is 5.2. The question requires us to prepare a production report, and then we also have to prepare a productivity report. So that is what we have in this question. And the question is here, it reads, LECO Limited is provided you with the following information for August 2019. We are given budgeted information there where we have working days per month, 22 days, number of employees, 3, normal working hours per day, 8 hours, and then we've got units produced, 400 per month. So remember, this is the standard in terms of the budgeted, that is budgeted or expected uh, to be produced in terms of units. 400 are expected uh, to be produced, and then the normal working hours per day, the expected is 8 hours. So that is what we have in terms of budgeted, and then actual is what then transpired during the period. We have got the summary of clock cards, whereby we are given Aramudli. We are given a summary of what happened to Aramudli, and then the next one is N Molesane, and then the last one is Kem Kize. So this is what we have in terms of actual information. So beneath that, we've got manufactured in August of the current year, 390 units. So what does it mean? It means that the actual production was 390 units, and then what was expected to be produced is 400. That is what we are given here. So that is what we have. Then on the required part now, we have to prepare the following reports of LECO Limited for August 2019. Then on 5.2.1, we've got the production report, and then 5.2.2, we've got the productivity report. So we're going to start with 5.2.1, where we have the production report. So on the production report, we are going to make a comparison of the hours. The hours, we compare the budgeted, and then we compare with the actual, and then we see the variance that is there, and then obviously we have to deduce whether we've got a favorable balance at the end of the period, or is it an unfavorable. So we are going to go through that, and then we also look under production reports. We're also going to look at the production in terms of the number of units. So we're going to compare 390 and 400, which is the budgeted. And then we come up with the conclusion whether we have got an unfavorable or favorable. So that is what we have. So on hours, let's start by trying to see the budgeted hours that we have. Since we are going to compare the total number of hours that we have in terms of budgeted, and then we compare with the actual. On budgeted, we are told that here that on budgeted we have 22 days. Number of employees, we have got 3, and the normal working hours per day is 8 hours. So what does it mean? We need to calculate the total hours that are here. So we have got 20. So what we are going to do is we are going to say working days per month. Then we multiply by 3 workers, because each worker is going to work 22 days here. So we multiply by 3, and then when we get the total number of days of all the workers, then we multiply by the number of hours per day times 8. So basically here, what we are going to do, we are going to say for budgeted hours, this is our hours. We are going to say here 22. Then we multiply by 3. Then we multiply by 8, which is the hours per day. Yeah. So when you multiply that one, we are going to get 528. So this is our budgeted hours that we have, or the budgeted labor in terms of hours. So here is hours. So this is what we have. So this is the summary that we are going to put in our answer section. So if you go to our answer section now, you see we are going to make a comparison of hours there. So what we are going to do there, we are going to say, start with the budgeted. So we have got budgeted here, budgeted labor. This is our budgeted labor. and it's coming in the form of our hours, the hours that has been worked. And remember, to find the total, we said 22. We have 22, and then we multiply it by 3 workers that we have, and with 8 hours per day. So this is how we calculated it. And when we calculated it, the total that we have there is 528. So we are going to put 528 there to represent the budgeted total budgeted hours there that we have. So that is what we have in terms of budgeted. So having done this now, then we find out about actual labor hours. So here we are going to bring the actual labor hours, the actual labor in the form of our hours. Then after having the actual labor hours here, then we compare between the two to find out if we've got a favorable position or an unfavorable. So if you come back here, you would see that this is what we have in terms of actual. So for the first worker here, Aramud Lee, we are going to calculate the actual that we have there, the number of hours. So we come here, we have 19 days, it's 8 hours per day. That is 3 days sick leave are going to be removed there. So we know that the normal is 22 days, that is here. So if you remove the 3 days from 22, we are going to be left with what? With 19 days. So that is what we have here on the first worker. So we are going to say 19, then we multiply by 8 for the first worker. So if we do that, we are going to get 152 here. And then for the second worker, we are not going to remove any days there. We're going to say 22. And then we multiply by 8. And then we are going to get 176. And then the last one, we've got 22. Then we multiply by 8. And then it's going to be 176. So that is what we have there. So the total actual hours, we're going to add this one, 152 plus 176 plus 176. So if you add there, you would see that the total that you are going to get there is 504. So we are just going to summarize that on the answer section. So if you come here now with actual hours, remember we got 152 for the first one, and then the second two, we had 176. So we're going to add 176 plus 176. And then the total that you are supposed to get there, that we got there, was 504. So here we've got 504. So that is what we have now. Then we make a comparison between the two. So here you would see that here we've got the budgeted being greater than the budgeted being greater than the actual. So what does it mean when in terms of the labor hours? If the budgeted is greater, if the budgeted is greater than the actual, we are going to have a favorable balance here. So here, what we can say, we can just try to find the difference that we have there. So when we say 528 minus 504, we are going to get 24 here. And then this one is going to represent it as a favorable position. So we've got a favorable position that we have there. So why are we having a favorable? Is because we expected the workers to spend 528 hours, but they spent lesser, which is 504. And what is going to happen at the end is that the costs now here is going to be lesser since the actual labor hours that has been spent is lesser than the budgeted. So the smaller expense that is there is going to lead us to a favorable position. So here maybe we can summarize in terms of these positions. So in terms of labor hours that have been worked, when actual is less than budget, it means we have got a favorable position. Then on the other hand, also when actual is greater than the budget, we are going to have an unfavorable position. So that is what we have there. Then next, in terms of this production report, now we go to the production, whereby we are going to compare the number of units that has been produced, the budgeted and the actual. Then we compare. So we have production now. Second part is production in terms of this report. Production. Then on production, we have got the budgeted production. Let's start with the budgeted production. So that is what we have in terms of budgeted production. We go back to check what figure do we have in terms of budgeted production. So if you come there, this is the information that we have. So in terms of budgeted production, this is the budgeted information that we have. So the budgeted production that we have there is this one, which is 400. So we've got 400 units as budgeted. So we are just going to put 400 there for budgeted. Then we have our 400 here. And then for actual production now, beneath that, we have actual production. Then for actual production, again, we go back to check where we have actual production. Actual production is just beneath the budgeted there. We are seeing that it's here. This is our actual production, 390. So this is the figure that we are going to put there again, 390. So we have 390. So what we have now, we have got this situation whereby our budgeted is greater than our actual. So what does it mean? We expected to produce 400 units, but what we produced is lesser. So obviously, this is going to lead us to an unfavorable position, because what we produced is lesser than what we expected to produce. So that's what we have there. So we find the difference now there. You'd see that if you say the difference is going to lead us to an unfavorable, so obviously we are going to present it as a negative figure there. So if you say 400 minus 390, you get 10. So our 10 here, present it as a negative in brackets, show that it's an unfavorable position. So here you just indicate that it's an unfavorable. So that's what we have. So in terms of a hint that we have there, when we are on the production section and we want to see whether it's a favorable or unfavorable, we come here, we say if budget is greater than actual, we have an unfavorable position. And then the reverse, when budget is less than actual, then now this position that we have when we have now a favorable stance. So that's what we have in terms of the production report of LECO Limited on the first part of the question. So remember, we've got the second part of the question that we have, and let's see what we have on the second part. On the second part now, we've got the productivity report, but basically productivity explains anything that we have per unit. If we reduce anything per unit, it will lead us to a productivity. If it's labor productivity, we are saying the number of units that have been produced by each individual, on average by each individual worker, whereby we are just going to say the total production divided by the number of workers that we have, then we get per individual worker what is the production on average. So here, this is what we are just going to do. That's 5.2.2. So on that one, on the second part, what we are going to do, we are going to find out about the budgeted time per unit, and then we compare with actual time per unit. So we go there, we create the answer section for the second part there. So here we are having 5.2.2. On 5.2.2, we've got the productivity report. Productivity report. So this is productivity report. So we are going to start with the budgeted time per unit. right? The budgeted time, we have already calculated it there in the production budget. So we're going to take the total number of hours that have been worked in the production budget. Then we divide by the total number of units that we have. So the budgeted time per unit, the formula that we are going to use for the budgeted time per unit, we are going to say it is equal to total production, or we can just say total. Here we say total production as our numerator in units. Total production. Sorry, the numerator, we are going to use the number of hours that we have there, the total number of hours, then we divide by the total production now. So here we say total number of hours, total number of hours here, then we divide by total units in terms of budgeted. Right, so that is what we have there. So what are we going to do now in terms of this calculation of budget time per unit? We go back to check the total number of hours that we have, but we have got it in the production budget there. We go up to check the figure that we found there. So the total number of hours is here for budget labor hours. We got 528. We got 528 here. So this is the figure that we are looking for. So this is going to be our numerator, 528. And then the denominator is going to be the total number of units in terms of budgeted, the production. You come here, you see that we've got 400. So this is going to be our denominator, 400. So we come back here now, we say the calculation now is going to be 528 divided by 400. Divided by 400 there. So if you calculate this, you are going to find that you're going to find it in terms of decimal. So we present it in minutes. So we know that in 1 hour we've got 60 minutes. So we multiply by 60 minutes, so that our answer, we are going to present it in the form of minutes. So if you do that, there we are going to get 79.20 minutes. So here we've got our answer that we have now is 79.20 minutes. 79.20 minutes. So the second part now, we go to the actual time per unit. Actual time per unit. So we are going to use again this formula of total number of units of total number of hours divided by total units. So if we go back now to there to check the figures that we have for actual now, in terms of number of hours in total units, we can go back and check there. So you'd see that now we have this one for actual hours that we have is 504. This is going to be our numerator. Then our denominator is the total production that we have, which is the actual manufactured is 390. So it's going to be our denominator there. So we come back here, we say 504 divided by 390. Then we multiply by 60 over 1. Then when we do that, we are going to get 77.5